Hello, ladies and gentlemen. Good evening, or good afternoon, or good morning. Welcome to this new edition of the Video Market Analysis. Just by the time you would have heard, this video, you would have gotten the address or the speech of two speeches. One of Federal Reserve Chairwoman Janet Yellen, which is expected to start in around not 1 hour from now, from when I'm doing the video. And it's an address. It's basically it's a welcoming remarks, and so we'll see what she's going to say beyond what she has said in the last few weeks. And the other one is the president of Catalonia, the Spanish president of Catalonia, who is expected to be speaking after 45 minutes from now. So by the time you play this, he would have made his live TV address, which is expected to announce, officially declare independence after Sunday's referendum. And so that will likely trigger further opposition and probably violence and probably threatening measures from Spain, from Madrid. And we'll see how that will impact the euro and gold. But so that is going to be quite interesting. There's a few things to talk about, guys. So we're gonna have to be talking about tracking the dollar movement right now, and whether this analog from 2002, which has been working very well for the last few weeks, for the last 7 weeks. It has been working very well for the last 7 months, I would say. That it's still working, and if it's going to continue to also work from the sense of the corrective rebound. So we'll have to look at that. We're going to look at also euro-dollar and the euro-dollar trade, which so far seems to be as planned, supported at around 117.20, 117.30. And also it's going to be, obviously there is the NFP report, which is very important, the job report on Friday. We're going to have to see how the market is going to decide to shrug, to what extent it's going to shrug any downside surprises from related to the Hurricane Jose and Hurricane Irma. Hurricane Harvey and Irma. Okay. So basically, we're just going to mention this, and so we're going to have to look at these numbers, which are very, very important. And so let's just get through first of all let's look at the story with the dollar index analog that we mentioned. Okay, so here it is, and here's where we're going to do this. Okay. So right now, guys, the dollar index is doing this. So it has fallen hard, fallen below the 200-week moving average, and now is trying to recover. So the question is, we're expecting it to go to no more than 95. So here is the analog of 2002. Yes, those of you who said were saying, well, the analog with the DAX did not work. Well, the similarity with the strength of the analog of 2002, 2001, 2000, 2003 in the US dollar worked more successfully. And worked for a longer time than that of the DAX, which was just the key, which was just a matter of 2 months, and basically. So here we are. We've fallen below the 200-week moving average, and here is what happened in 2002. So here we are. Okay, so after we've fallen below the 200-week moving average in 2002, this was the peak, 15-year high in the US dollar in 2002. We've fallen. So here is the similarity. So we've fallen for 4 weeks. Then we tried to rebound, and here is what happened. By the way, if you look at this, look at the interaction with the 100-week moving average. So here the 55 is above the 100, but it's turning around, and there's a trend line. And again, the similarity here. And again, for those of you who have these bad memories of the DAX trade that happened, we're going to visit that in a bit. Basically, like I said, the DAX one, the similarity lasted for probably 2 weeks, but this one lasted for a good 3 years. And here we are. So if this repeats of 2002, so we expected to see this. throughout the dollar index, we're supposed to see a consolidation that lasts around 2 months, and then we come down. And that's basically, so if this really happens, then we expect this to last for around 2 months. And this is the key. The range will be anywhere between really 95 and between 90 to 50 up until early December, which is basically the time of the Federal Reserve. All right. So for basically a tradable decision, so here is that we did go long euro sterling and we are long euro dollar. And the story here is that this is likely to go into around a month and a half or a 2 month consolidation between 116.80 and 118.80, or even 119. Okay, so we expect it to go here up until December to be inside this zone. Now, just a few things about the for Friday's trading. So because we had the we already had a disappointing number, or not disappointing, but actually the ADP was fell from, I'll tell you what happened here just for you to look at the details. So in here in the ADP in the US, just to show you that, yes, so the numbers did come in as expected. The weakness is coming as expected from the hurricane. It fell from 228, a revised 228,000 to 135 because of the hurricanes. So here's the thing, and just let me show you. So for the NFP, it's expected to come in down to 80,000 from 156, but I think there's a very strong expectation that it could go to actually minus 20 or minus 30,000, and this is where the range of expectations, they're ranging between anywhere between minus 70 plus 100,000. Now, here's what happened in Hurricane Katrina in September 2005. September 2005, that's when the Hurricane Katrina, which was the biggest human and infrastructural damage. So we had, so the initial revision, the first revision was 8,000. So this is not the first reading. This is the first revision. Okay. So this is a second number. So the first revision to the first number is basically the second number. So it's the first revision. So we had minus 8,000 after we had 211,000 in August. Then we had minus 8,000. It was revised to 67. And then October came in at 44,000, we revised to 84, and then the subsequent numbers went up by 10 times. So this was a time when the US economy was quite strong. It was in 2005. It was much stronger than it is right now, and inflation were much higher and so on, and the Fed was in the midst of raising rates. So the story is that what I do think is going to happen, ladies and gentlemen, is that there's a very good chance that we may see a negative number. And I think we may have sort of a negative reaction to the US dollar. It may not last throughout the day, but I think there's a good chance that we may jump in the US dollar, and jump in the euro dollar to as high as 118.80. So we could probably go towards 118.80, 118.70. We go toward the top of this previous candle. I think there's a good chance we could do that. And we have the trade here. So we have the trade here at 117.40, and we bought at 117.40, so we are and we are going to target 120.80. But I think if we do, we see 118.80, 118.90, we might probably take profit. One more thing regarding the NFP, which is very important, is that what a lot of analysts and economists are saying is that because of this speculation and however bad it is, the question is, it's going to be temporary. So there is going to be an emphasis on average hourly earnings. And if we do get this expected 0.3% on the month to month, then this could bolster the US dollar. One thing is that the ISM from today, from the services, and the ISM manufacturing from Monday were very strong. That now they are really increasing chances for a rate hike for the Fed, which are right now at 70%. Okay, lots going on. So basically, So what is going to happen is that we could see probably some subsequent any disappointing dollar movements regarding the jobs as a result of the hurricanes could probably lead to a recovery next week. Okay, but it's very important to look at this dollar index analogy and then with 2001, 2000, 2003, and to see how we can trade it, and we can think that probably from 116 we can. I don't think we're going to go below 116.80, 116.90 in euro dollar, and not more than 120. I know that's a wide range, but that's the most we can do right now. And we are not necessarily going to go on a big upswing, a long upswing, or downswing. We're going to stay in a range because that's what markets usually do. And what we had in the last 8 months was just sort of not an aberration, but it was a reflection of a lot of excessive dollar longs. But that's what the markets usually have done, especially in the euro dollar. So average hourly earnings is important. Just one thing, guys, for those of you who trade sterling dollar, just want to show you something here. So basically, there are some important speeches tomorrow from the BOE. And before I go into the chart, let's just identify these. So we had today the PMI services for the UK, and that sort of saved the day, and it pushed cable towards 32.90. It was expected to come at 54, came at 54.1, and it was a refreshing change from the disappointment in the manufacturing PMI and the construction PMI, which actually fell below 50 contraction levels. But here is what you need to know tomorrow from the Central Bank of the UK, which is very important. So you got McCafferty, who's speaking at noon New York time. Thursday, which is 5 p.m. London time. He is hawkish. He's the one who voted consistently for a rate hike in the last few months. So there's not going to be any surprise. The question is to what extent he's going to be hawkish, to what extent he's going to increase his hawkishness or not. Right now, as it stands, the BOE, the market is pricing a BOE to raise rates in November with an 80% chance that they're going to raise rates in November. But here is the big one. Haldane, basically, who's the chief economist of the BOE, who used to be dovish for for years, has now grown quite hawkish since June, and he is expected to speak tomorrow, Thursday, at 1:30 p.m. New York time. So that is 6:30 p.m. London time. 6:30 p.m. London time, 1:30 p.m. New York time. He's expected to speak tomorrow in London, and he's going to deliver Economic Research Council talk on central bank engagement with society. Very important. I would guess if he's speaking about engagement with society, so he's probably going to have to speak about having to contain inflation, because inflation erodes the purchasing power of people. Even though earnings are weakening, he's going to say that it might be just a question of time, and labor markets are tightening, but we still have to fight inflation. So probably he's going to have to call for a need to raise rates, which in turn could help sterling. This support that we saw here could not be an aberration. So this is in line with the 117.20 support in euro dollar, with sort of 94.80 in the dollar index resistance. And this low and this high might not be a good entry a bad entry to enter here. But let's look at euro sterling. And so we have the trade here. So I did talk about this in the blog with Orbex last week when we were at 87.80, but we did not enter here for the premium. I needed to be sure. Not enter until 88.20. And now the market, so we entered at 88.20, and now the market is at 88.80. So it is pushing higher. So let's just look at this. This is a nice looking chart, a nice confirmation of the base here at around 87.80. Well, we've got this support here. So we have the trade, we had this, we had the analysis, and we are looking at the 200-day moving average at this level here. And here is the chart that we had. So basically, we also looked at the yield spread, the German UK yield spread, which is looking at a higher low, and here, as far as the support is quite key here, the euro sterling monthly and the weekly. And if we do look at the weekly, what I like about this pair, guys, is that it's relatively quote-unquote cheap. It doesn't cost a lot of money, and it is not very volatile, and it does not expose you to any of the dollar fluctuations, US dollar fluctuation. But this is a nice looking support here, so we could be probably looking around 91, which is very plausible that we could be looking at this. I wrote a piece about gold here. And I'm going to mention it here with, well, actually, I had a trade on gold today. So here it is. And we went long, finally, gold. And this is going to be, so here I laid out the rationale, got in between 1245 and 1275. So if you have not got in, and the market right now is at 1274, it's not a bad place to start putting in longs. So here are the charts that I put. But what is important is that we're seeing some nice stabilization in the gold bugs, and also in the daily gold, and basically, so here is a piece that I wrote here, and we do think that yeah, even if the dollar is going to come back, we think that not more than 95. And what I like about this trade is that here's what I'm going to show you. Is that what I like about this is that we are entering at a nice level from a reward to risk ratio, which in the sense that we're entering at 1274 or 1275, and we are close to a key support, which is a 200 day moving average, and then again this low, which is at 1200. So we put the stop at 1200, and we are targeting around 1350s. And what is important, as long as we don't break this 200, we're still on a higher low formation. Okay, so this is the monthly chart. So this is the higher lows, this is a low, this is a higher low, this is a higher low, and that's where we are here. But we have an intermediate trendline support around 1250, so it does look like this is still looking that it's going to go back to at least towards 1330, whether it's going to stop at 1240 or 1234 or 1230 or 1220. That's where you have to really gauge your entry, especially when you're trading on leverage. And then the red one here is really the gold bugs index, and for those of you who've looked at my analysis, just want to show you something, guys, which is basically you know, we long said that the gold to gold box ratio is something that shows that as it goes down, gold usually pushes higher and metals push higher. All right, so we've seen this in previous analysis. So this is basically gold divided by the gold box index, and as long as it has higher lower highs, unless as it goes down, gold usually goes up. Okay, this is analysis that I've shown in many presentations before. I don't really show it in the unpaid stuff, but basically, and as you can see, and as this ratio improves, gold and metals usually go down. So if we're seeing a renewed decrease here, so we might be looking at a nice stabilization, and that's one of the reasons that we got in, guys. Okay, if you want more questions, you can email me, or you can tweet me. We're going to finish. Actually, let's and if we are relatively bullish in gold, that means that dollar yen could be nearing its top, and it would seem that here the trail top around 114. Maybe we could see it, maybe not. Technically, it does show that we're probably 114 might be the top, but one of the instruments that has a nice correlation with dollar yen is this is the 10-year yield in the US, and basically, if you look at the stochastics as far as the weekly, you're seeing that you're reaching a peak here. 233 is a big top here that we are targeting, or we are where the momentum is being dissipated not only a triple high here, but higher low, lower highs. But if you look at the monthly, here's what you're looking at. Okay, monthly stochastics, you will see this. So this is important. All right, this is a nice, a lot of people talk about divergence. This is a nice convergence on the downside between the price, the yield, and the momentum, which really tells you that with this 100-month moving average is around 239. The DAX trade, guys, this was an unfortunate trade which I lost money on, and we were really comparing with 2017 and the similarity were here. A lot of people said, okay, so you got stopped out. Is there room for probably a renewed entry? And not really sure that it is right now. I was looking at the Euro stocks for reference and it didn't work. But this was the similarity, if you remember, you know, basically with summer 2015, we came back down, we had a gap up, we went up, and we dissipated just around this neckline. We did the same thing, and then we just shut up. And this is where basically it stopped being. It was a punishing wake-up call here, and it does show that it could probably push higher here. We're not sure. Maybe it's going to go to 12. It has a potential to just go to towards 13,000, 1330. The momentum looks to be quite solid here. And what about the euro? What about the euro stocks? So the one that we had. Basically, if you look at it. If you look at you'll see that the situation as far as the euro stocks, and you look at the weekly chart, you'll see here that yeah, the momentum is quite high. And even that of US stocks, if you look at the transportation index, where is it again? Yeah, okay. You'll see that there is a nice convergence here with the industrials and the transportation. As far as the weekly, they're both hitting new highs, and there is a strong confirmation between the two. And we are hitting, you know, we hit a record here in the transportation and a record in the industrials, and this seems that there is no way for us to short this, and it seems that the uptrend is still intact. For indices, is it would it pay for us to buy here and to get in here? I would not get into this because right now this seems this market is very, very frothy. But here is what I want to look at, is the remaining index trade that we had, which is the FTSE. We were sitting on a 200-point gain, and now we are sitting on around 50-point loss, unfortunately, which is the FTSE. But here's the interesting thing: if you look at the daily chart, here's what you'll see. So we had that head and shoulder formation, and we are breaking above the shoulders. We'll have to see to what extent we're going to be breaking, or we're going to be successfully breaking above this this week. But it seems that if we do break above this, we could very well go back towards the, towards 749, and our stop, ladies and gentlemen, is here. So we entered at 7,400. 74.15, and we have 75.80. So again, watch at those. There's a possibility that we may see a negative number in the figures on Friday from the UK, and then people are gonna quickly buy. The extent to which people are gonna quickly buy the US dollar, we're gonna depend to what we are gonna have a surprise or not in the the earnings. We also have the Canadian figures, the job figures, and we got stopped out in that. But I do think that might be a chance for us to get back in dollar CAD. Very similar, the weekly chart in dollar CAD to that of dollar index. We actually got stopped out by 9 pips. Okay, so dollar CAD, we got stopped out by 9 pips, just to show you what's going on here. To dollar CAD, so we shorted 23.15, we stopped out at 25.30, and the high was 25.39 on the daily chart. If you look at this, look how it's looking. There might be a good chance that this would be a decent re-entry at these levels. Here's where the high was, 25.39. So we got stopped out by 9 points. But does this seem to be like the trend line resistance is still intact? It does. So do not be surprised if we get back in and going long the CAD either against the dollar or another currency. The euro dollar is still intact, and euro sterling still intact. We might be looking at euro kiwi. So ladies and gentlemen, good luck and all the best, and thank you.